What's up everyone, it's Scotty with Money Vesting. So in this video, we are going to be talking about Google, or in other words, Alphabet, for reporting their first quarter fiscal year 2023. The stock price was up a little bit over 1.5% after hours, although it was really volatile, getting up to 110 and as low as 101. So we are going to break down everything Google announced and reported for the first quarter and go over the technical analysis as well. So hope you guys enjoyed this video and find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. The link to our Discord and Patreon is going to be down below if you're interested in joining us. And there is a 16% annual discount that does expire in now under 5 days. So again, link's going to be down below if you're interested in joining and getting access to all the buy and sell alerts, options alerts, trade ideas. Everything's going to be included with the link down below. So Alphabet here reporting revenue and earnings beat for the first quarter. Now that is, on the surface, seems very bullish, but earnings expectations had already been reduced down so many times. They had been downward revisions time and time again for both revenue and EPS. And as a result, it does seem like companies beating expectations, but the growth EPS declined on a year-over-year basis and revenue was very flat on a year-over-year basis. So Alphabet reported first quarter results on Tuesday that exceeded analyst estimates. The stock jumped over 4% in after hours trading, but of course settling in at around 1.5% after hours. So this right here is going to be Google. So you can see that it was incredibly volatile. It traded as much as $110, $111 to as low as $101, $102, and pretty much settled at around $106, up just over 1.5% after hours. And the futures market right now is very, very green. So the company also said its board authorized a $70 billion share buyback. That is a pretty substantial amount if you really think about it, because Google's market cap is $1.3 trillion. So if you do the math here, we're looking at 5.26% share buyback, right? 5.2% of their float is or going to be potentially bought back from Google, considering the price is relatively trading at lower multiples compared to where it was a few months ago, a few years ago. So that in itself is enough to push the stock higher, 4 to 5%, because that's how much they're buying back in terms of their share float. But right now, of course, up 1.5%, and $70 billion share buyback is a monstrous share buyback program. Now, earnings came in at $1.17 per share versus EPS of $1.07. Revenue was just shy of $70 billion versus $68.9 billion. So we got a nice beat on revenue, nice beat on EPS. YouTube advertising revenue was $6.69 billion, but it is lower from same time last year, which I'll go over in just a minute. Google Cloud revenue was also down from same time last year, so $7.45 billion versus $7.49 billion. And because of all these cost cuts that the company's been doing and the layoffs, they are indeed profitable on an operating basis for Google. I'll get to cost cuts here in just a minute. And traffic acquisition cost was $11.72 billion. And revenue was up 3% on a year-over-year basis. So this right here is the revenue changes in revenue year-over-year, 3% to $69.7 billion. And that's up from $68 billion. Operating income was down pretty substantially from $20 billion down to $17.4, and net income was also down from $16.4 billion down to $15 billion, down from $1.23 to $1.17 per share for the company. So revenue still slightly higher, but of course operating margins declining from 30 to 25%. As a result, operating income and net income was also down on a year-over-year basis. That's pretty much the story for most companies at the moment. So Google search and other business increased to over $40 billion. That's good. YouTube ads were lower from 6.8 to 6.7 billion, which is pretty appropriate because, as I mentioned in my previous video in the market update, YouTube ad rates have been coming down. They have really dropped from 2 years ago, and they have somewhat dropped from 1 year ago. So it's not a surprise that we are seeing a bit of a pullback in YouTube advertising revenue. Google Networks also down 8.1 billion, from 8.1 billion down to 7.5. So that is a pretty modest decline as well. And Google advertising overall was slightly down, more or less flat, I would say, from 54.6 billion to 54.54 billion, and only on the back of Google search and other, which was slightly higher on a year-over-year basis. Google services total, which includes Google Other, which was higher from 6.8 to 7.4 billion, came in at just shy of $62 billion. And Google Cloud was the big jump there, so increasing from 5.8 billion to over $7.4 billion. Google Cloud Services really kicking up, and it's the one that's really driving some of that growth for the company. If it weren't for Google Cloud, the company would have reported revenue declines on a year-over-year basis. And number of employees, as you can see, that they are still higher from same time last year, from 163,000, almost 164,000 to over 190,000 employees right now. But that number is in the future quarters. I'm not going to be surprised if that number continues to trick lower a little bit, considering how many layoffs we've seen. So that's the 3% growth is what we're seeing in the first quarter for revenue for the company. And you can see how much it's come down. And moving forward, like the remainder of 2023, we are going to see comparables get a lot better for Google because last year we saw revenues competing against 2021 numbers when the growth was over 40, 50, 60%. And as a result, these numbers continue to decline lower. And now we're once again on the uptrend. So it's possible that revenue growth in the subsequent quarters is actually a lot better. But we can't say the same thing for margins unless, of course, a company continues to lay off its employees and do a lot of cutbacks on spending. So to grapple with the recent advertising weakness, Google has had to make its extreme cuts in the company history, including laying off 12,000 employees, about 6% of its workforce in January. And this month, CFO Ruth Porat announced multi-year cuts to things like real estate, employee services, and equipment. And Alphabet reported $2.6 billion in charges related to the layoffs and office space reduction during the quarter as well. So it's possible that revenue starts to go back up in terms of that growth because year-over-year comps are going to start to become a little bit more easier, and net income also starts to get better with all these cost cuts that we're seeing. But at the same time, you really have to be laying people off that are inefficient or really just not doing anything at their jobs, right? If you start laying people off that are actually efficient and drive the company's revenue and growth, then that will become a problem in itself and something that needs to be addressed from Google's management in the future, because we don't want Google cutting their expenses in order to improve their margins, but then the revenue starts declining as well. That would not be the best case scenario. What we want really from Google as shareholders right now is really for Google to cut expenses, which is good, right? Driving margins higher, while at the same time maintaining revenue growth, if not increasing that revenue growth to higher levels. Now, this right here is the EPS estimate and something that we have already discussed on the channel before. So 11% this year, 19% the following year, 18%, 12%, 13, and 16. So I think that compounded annual growth rate for Google is still pegged at around 12 to 14%. And that still gives us our fair value somewhere around $85 to $90 per share, if I'm not mistaken, for Google. Could even be as much as $100 depending on that flexibility range for the company. But this right here is going to be the current valuation for Google, trading at 23.4 times earnings, 21 times earnings on a forward basis. And price to sales were a little bit over 4.8, 4.5. And price to cash flow trading at 13 to 14 times. And enterprise value to EBITDA at just under 14. So it's still trading at a pretty decent valuation compared to some of the other big tech companies out there. So overall, I would give Google like a solid 7 out of 10 in terms of earnings. The guidance was good. The revenue EPS numbers were good. Yes, we did see declines on a year-over-year basis because of not only seasonality, but of course advertising slowdown in 2023, but they were still managed to grow Google Cloud services. We did have some decent profitability. Earnings per share obviously still declining, but future quarters, I do expect Google to do a lot better, considering that we are going to be comping over some easy numbers. But the real question then is going to be the net income for the business and, of course, the revenue growth. Can it still be strong after all these price cuts? So support level right now for Google is going to stay put somewhere around this $101, $102 per share. So this right here is going to be that level of support. And of course, resistance all the way up to $109, $110. And right now we're just mostly consolidating sideways. I wouldn't be surprised if Google continues to trade sideways and get rejected at that resistance at 109. Support level is going to stay put at 101. So not a huge price action moment for Google. But of course, 123 is going to be that next target in case we continue to see some more upside and a potential breakout past $109, because that's exactly where we have gone rejected back in February. So a couple resistance levels there, and a breakout will put us on target to getting up to $123 per share. So I'm still bullish over the long term on Google. No doubt that it's going to be successful. Of course, it's got its battle with AI and Microsoft, ChatGPT, and OpenAI, and all those things. So we're going to be talking about Microsoft in a separate video, but long term, still believe that Google has pretty significant dominance when it comes to Google search, advertising, cloud services, all those different things, and of course with an upper hand with artificial intelligence as well. So hope you guys enjoyed this video, found it helpful. If you did, make sure that you drop a like, subscribe to the channel. My game plan is very simple. If it does drop below $100 per share, I would love to dollar cost average slowly and steadily, even as low as low $80. Would love to plow money into this company in the future, and resistance is going to stay put at 109 all the way up to 123, at which point I would be interested in maybe selling maybe a couple of calls here to hedge my potential downside. So we'll be trading options and dollar cost averaging at lower prices for Google. So hope you guys enjoyed this video, found it helpful. Make sure that you drop a like. 16% annual discount for Patreon available down below with the link. Expires at the end of this month. As always, happy investing. I'll see you all in the next video.